Hello, 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 hello. Mic test, mic test. Hello, guys. Welcome to the 55th edition of the Trading Opportunities webinar. This is Nirav. And before we move with the webinar, let me know if you can hear me and see the screen. Hello, Steve. And also, guys, good morning, good afternoon, and good evening to you guys, depending upon the time zones you are in. Hello, Philip Calphone. Okay, so since everything is working fine, let's just quickly get started with the very first thing called the disclaimer here on screen, suggesting that all content presented here is purely for educational purposes and not soliciting buy or sell. If you do go on to use the views presented here for your trading, investing, or for any other purpose, you yourselves will be liable for your profit, loss of profit. Right, with the legalities out of the way, let's now head over to the very quick introduction. I have 1 second, which this one. So, guys, this is a good about to start for those of you joining in for the first time. Of course, for those of you who are joining in regularly, kindly bear with me for a minute. So, my name is Nirav. I'm the admin and owner of 50 Eyes Market Analysis, which is the website where I have been presenting my views for 7+ years, and the YouTube channel of the name 50 Eyes Market Analysis, where this broadcast is currently being done live, right? Like our previous broadcasts, which have gone every week, Monday, Wednesday, and Friday. The timing we go live is always 2 p.m. GMT. So if you want to join in live, this is what we are currently working with, right? And more of my introduction. I'm also the author of the book Think with the Market: Secrets to Achieve 80% the Accuracy using Elliott Waves, available on Amazon's Kindle platform. For those of you who want to read it electronically, it's right there at the click of a button. Lastly, before we proceed, here's my quick look at the accuracy of the last 6 years. Consecutively, I've held 80 plus 80% plus accuracy for these years. 2021 82.22, 2020 88.52, 2019 84.88. It's taking a little bit of a time to load the actual spreadsheet. Right there it is. So 2020 is 88.52, and if we scroll down within the spreadsheet, you can check the date when the analysis was done, the instrument name, the analysis, actual analysis, and the link to the video or the webinar, right? So on so forth. 2020 88.52, 2019 84.88, and 84.61, and 87.5, and 83.34. So why I do show off this is because generally even this industry accuracy of 60% is considered very high, and I have consecutively for 80%, showing the level of expertise I have in my chosen field of work, right? And lastly, we have also enabled the join button on YouTube, which basically means that if you are interested in watching more of this kind of content and would like to see more of it, then you can subscribe and then check out this membership feature using the join button and support the work. Of course, without that support, I will have to end these webinars, and I'm currently considering looking at the number of subscriptions we reach by the end of this month, March. If I'm not satisfied, I will look to end the project. So that's about that. With that, let's now head on to the actual charts. Right. Yeah, one last thing. Generally, the way we proceed with these webinars is we first of all go over the charts of the currency pairs: Euro USD, EURCAD, USDJPY, EURJPY, crude gold. Crude gold, basically commodities, comes afterwards, and then indexes, S&P Nifty, and lastly we discuss Bitcoin. Right. So once I'm done discussing a particular instrument, you can then post your comments in the live chat, right? And whatever doubts or queries you may have, I will look to discuss them. So with that out of the way, let's first quickly check the chart of Euro USD over here on screen. Once again. So Euro USD, last time when we discussed, we were of the view that this market is currently in sideways progression and can continue propagating within this range. Basically, it is three waves down, three waves up kind of a movement, right? And one important thing I suggested last time was that if the market, where it is, if the market really does go near the level of 1.09830, then we may have a flat progression for this counter, right? However, what does seem to be the case is that the market does not want to go to that level, at least not from what we can see right now. So this suggests that there is the possibility of this not being a flat, but being a complex correction, in which case this leg down will be called a W. Again, keep in mind this is one of the multiple possibilities which I can see right now, but these are the important ones, so I'm discussing them. X, and if this is the possibility currently under progression, then the Y will be in three legs down, right? And we expect it to at least achieve equality with W or go more than or more lower than W. More or less, even if everything is not working as we thought, at the very minimum, we expect that this wave Y will at least go lower than the low of 1.05154. So this is one of the hypotheses, or let's just say hypothesis number one, which we expect the market to progress down in three legs and take out at least the low of 1.05135 something. Secondly, if we want to consider the possibility of the wave W equaling to wave Y, then we can just project it, and we expect the levels around 1.04324. Right, do keep in mind we already have a projected target around 1.04202, so we'll just keep that as this 1.042 as our respected target, which we have calculated beforehand, right? Because after all, the equality is also coming near the same level. More important thing, on a shorter time frame perspective, for the downward movement to continue, we want to see a close below this support region, right? So only below, if the market closes below 1.06747, which is within below the white support box, then we'll be interested in looking for selling opportunities on this counter. Unless it does that, there are other possibilities which are still quite valid, and they will still be valid if the market closes below this counter. But most importantly, as I was saying, the fact that this market can go anywhere within this box region, which is a very big region, still remains active. While we have changed our main hypothesis to the fact that we are expecting more downward movement and we have discussed the downside targets, the fact that this market can just go down and then up and then down is still active. And the reason is because it's forming a complex correction, and they do have the tendency to misguide us, you can say, or not misguide us, to become complex as per their name, right? So not much I can add other than the downside scenario here. We have discussed the important support region and the possible targets and the possible progression. If you still have any doubts, you can just post them in the chat or just do type in clear or understood while we move over to our next chart. Okay, I forgot to remove the text here. Thank you, Philip and Steve. With that, let's now head over to our next chart of EURCAD. So EURCAD, last time when we discussed this chart, we discussed basically just that the whole progression to the upside may have completed here as a wave Z, and this market can continue lower. If the market has not completed here as a wave Z and the Z is still continuing, then we do not have any setup or clear setup until this market takes out the high around, let's say, 1.492. If the market goes higher than 1.492, then we will be looking for more bullish what do you call setups or long opportunities basically. So the upside has not yet been triggered, and as far as the downside is considered, The Z being complete here or is still continuing is still in question. So I'm not really interested in making any downside plays, at least as of now. One second. Yes, so as I was saying, I'm not currently interested in taking downside plays as of now on this counter because of the possibility that it may very well just do something like this. So keeping that in mind, any downside movements, if taken, would be intraday basis kind of, right? Unless otherwise the market really does give something very fast or clear downside movement, then I'll consider otherwise. Basically, EURCAD is not in the list of the best opportunity giving instruments right now. So nothing much to add here. Let's just quickly head over to our next chart. Most likely it will have a better setup than whatever we were discussing on this. This is the one we are following. So USDJPY, we discussed it last time as well, and we updated the counts last time. The scenario which we updated was that this was possibly continuing as a double zigzag to the downside, right? So for those of you know not knowing what a double zigzag is, I'll just quickly tell you in this rough area on the right hand side of the chart that if the market goes down in three legs, A down, B up, and C down, then this is called the W. A down, B up, and C down is called the W. Let me redraw it. And if it does that again, A down, B up, and C down, it's called the Y. Both of these waves are joined by the connecting wave X. And since this first leg down is a zigzag, and the next leg down again is a zigzag, connected by a connecting wave, it's called a double zigzag. So similarly, in this particular scenario, we have already labeled it, so not much to explain here. We already have the point of reference starting over here. We already have the A down, B up, and C down, and then the correction. And then we are expecting again A down, B up, and C down, right? So basically, what this really means is that we still think that more downside is possible on this counter, right? Let me just quickly throw some more important points here. The second thing is that this important trend line seems to be almost tested right now, right? So if the market does sustain above it, then maybe we will consider or start to consider something to the upside. But I personally am not interested as long as it stays below 132.960, which is this important alert line I have placed, right? As long as this market remains below this 132.960. So there seems to be some lag here. Let me just quickly check again. Yeah. So as long as the market stays below this level, we are not interested in any long opportunities. Above this, we might consider, but as the situation is looking thus far, it looks like the downside possibility is stronger than the upside possibility, right? So USDJPY, wait and watch for bearish movements. Structure we have already discussed, and as far as the targets are concerned, we can look for equality, but I do not think it's a wise thing because wave 2 or sorry wave 1's low is quite near. So we will look for, rather than looking for actual equality or fib targets, we'll be more focused towards internal structures than their targets, right? So it's a wait and watch with the minimum downside target would be below 129.54. And currently the shorts are not triggered, but we are waiting, and you already know uh, past important support region will act as our important level to look out for. So basically we will be very much interested below 130.540. Inversely, those interested in taking aggressive shots can just enter and push the stops above our alert around 132.96. So USDJPY, wait and watch for sell off shorting opportunities, whatever you would like to say. Let me know if there is any doubts or questions in this on this chart. If not, we'll just quickly head over to our next chart of EURJPY. Well, thank you, Philippe, and thank you, Steve. Let's now head over to our next chart, EURJPY. It is pretty much moving as expected. Last time when we discussed this chart, we were of the view that either the market can fall straight off to the downside or it can so anyways, what I was saying was we were thinking that either the market can fall straight down or it can go up and then down. So basically we were suggesting that straight down would mean the wave 2 is already complete here, and up then down would mean that the wave 2 is actually continuing as a possible flat structure, which does seem to be the case here. So now we can quickly update the counts and yeah, so this is the scenario we are looking for right now. It does seem like this may have a little bit more upside remaining because it looks like this is only the 3 and the 5th wave is still progressing. I would not comment much on that because I have not checked it on the lower time frame, primarily because I'm not currently trading anything other than the indices. But we can have a very quick look here. So this is what I do expect on this counter because we are thinking that we are currently in a possible flat structure and complete count. Let me also update that. By the way, do let me know if there's any more questions you have on this chart because since the counts are so very clear, I do not think you guys have any doubt. I'm just pushing them for the sake of completing the picture. Okay, this completes the outlook I currently have on this counter. Yes, of course, it can also straight up fall because if it's bearish, then of course it can. It is not really required to go any more up at all. But so far, it looks like this is the count we will be following in the coming sessions. As far as the setup is concerned, if this really is a 3, 4, 5, it progresses like that, then we can at that point in time look for the 2-4 trend line break or multiple other possibilities will also exist, but this is the simplest one I can suggest right now. So that's about it for EURJPY, guys. I'll just move quickly to our next discussion. As I said, if you have any doubts, you can just type them in the comment section on this chart. Well, thank you, Steve. Okay, CL is not really precisely doing what we expected from this count in the last session. So previously we were thinking that yes, this wave 4 has gone a little bit more up than we generally would like it to, right? That it has definitely done. But that simply does not mean much. If the market still continued lower, then it would have been all right. And based on this analysis, we were thinking that this market will probably continue lower and the alert was placed around 66.113. However, what it seems like is that the alert never got triggered. And also this 4 is looking not like a 4, but probably something that will require a recount. Right. So what is possible here is there are two things that can happen. First is that our count is still holding on, which is suggesting that at least two more down legs can be seen on this counter. If that happens, the first leg will be for the Roman 3. The next leg will be for the Roman 5. right? So that's the first thing we are thinking. Now the problem is that we do not expect the wave 4 to behave the way it has. So either it is just doing its own thing, it is one of those cases where it's not going to give a very clear picture, right? Or it is simply just following a possible complex count. One second. Maybe let's just say possibly a triangle, right? That's also possible. So it's possible that the wave 4 is still continuing, but not just the way we expect it to, and it will then be followed by the leg down. So given the fact that we still have that possibility in front of us, I will like to keep this count as it is. Either the shorts will be triggered in the near future, then we already will be following the hypothesis one. If not, then we'll be looking to update this count if the market crosses 72.421, right? I have a good idea what it might be doing. Basically, it might most likely be going for testing the important trend line here, this white trend line. Delay is super high. Anyway, so it might be going to test this white trend line. That is what I'm thinking, right? So that remains to be seen, but at least we do have an idea that's more than important or more than necessary at this point in time. Let me know, guys, if you have any doubts on this counter before we head over to gold. Yeah, so I seem to have gotten some comments. Let me just quickly check. 759. There it is. Looks like a 5-3 from the bottom. 5-3 from the bottom. Not sure what that means. Let me see. Expect another 5 before trend line. No, it's possible that this count, if it's updated, may suggest that the 5 is already complete. If we have to recount, if the 5 is already complete here, I mean the circled fifth is already complete, then it is possible that it's heading up as an ABC to retest before the actual reversal. That is the other idea I have in mind. Hopefully that clarifies your query. I think that is probably what you were asking, Steve. Thank you, Philippe. So in that case, let's head over quickly to our next chart of gold. Gold. 24. 10. Okay, so gold, in the case of the gold chart, what looks to be the case is actually, first of all, let me just quickly discuss what we were thinking last time. Last time, my view was that we expect this wave 4 is still continuing. It can propagate within this box range. And with the strength it had gone up, it was looking like it may have already completed itself over here. That was just one of the possibilities, but it is still propagating within the range. So probably propagating as a flat structure, in which case we can label it as an ABC. And those of you not aware of what this structure really is, it's basically a structure of 335, which can also be seen like this: three legs down, three legs up, and then followed by five legs down. So we call the first three legs down as the A, next three legs up as the B, and this current progression would probably suggest the C is incoming or complete, right? But the fact is that these things can become much more complex than what they look like. So generally, the better idea to trade these kind of structures, I cannot what do you call explain the advanced ideas that I have discovered, but the simple idea which I can discuss publicly is that the general idea in these cases is to take swing positions near the breakout levels and add more in case it becomes complex as the market goes sideways and sideways. And the aggressive stance on this case will be if you just enter quickly partial longs here, like say one lot if you are a 10 lot trader on this counter, and keep adding more as it continues going higher, or and not or and add your stop loss below our alert level of 1920, right? So long story short, gold we expect swing long perspective, unless of course the market close below 1920. If it closes below 1920, then we will definitely have to reconsider our analysis and redo the counts. But until that really happens, we will maintain our bullish stance on this counter. Before move over to the chart of S&P's 500, let me know guys if you have any doubts, questions, or queries on this count or chart. All right, guys. In that case, let's head over to our next chart, which is S&P. Yes, today we will cover Nifty just after S&P, and actually, I'm going to discuss the longer time frame analysis. And this announcement again, I'll have to discuss it near Nifty chart, but we are also looking to start the new project on specific coverage of Nifty and some NC stocks. And also, I'm currently looking to cut down this current project as it is taking too much more time and the participation has not really reached as we expected. Right. Again, I'll make the same announcement near Nifty so that people who are watching just the Nifty analysis will come to know. And if you have any specific suggestions in that case, also do let me know. Right. So now let's head over to the chart and see what we were thinking on S&P's 500 last time and what's the scenario right now. S&P 500 last time when we discussed, I was suggesting first we discussed the longer time frame analysis and then I was discussing the short term analysis, and I was suggesting that possibly this is a diagonal in the downward direction, a leading diagonal, and there was a quick setup that I discussed, which is actually represented by this arrow in cyan color. You can see that the market has first gone above the trend line and then it breaks below the low. We will have a sell setup. I think I have discussed it in quite detail in the last webinar, or at least enough for those of you who are looking to make plays on it would understand. It seems to have worked out actually exactly like we thought. Right. First of all, the market did go above the trend line. So half of it, that is those of you looking for intraday longs, would have been able to make use of it if you understood what we were discussing last time actually. Secondly, what one second. I'm just updating the numbers. Secondly, or the second thing that we were expecting is that the short setup, which is the actual direction of this market, because the long or the upside movement is a counter trend move, if this count is actually correct. So if the market really is moving as expected, then we expect the market to go lower than 3909 as well. So below 3909 is what we expect is the real direction the market will come into play, right? So half of the analysis has already given us the profits. Other half we still have to see if it will trigger or not. Because of the nature of this current leg, it has seemingly started to take some support near the upper zone. So I'm not currently interested in adding swing shorts. I will probably become more interested if it really gives a sharp fall or something. But more importantly, at the important levels, I have the triggers already placed around 3908 or 9 something. Right. So long story short, we are still looking for possible sell off on this counter, but it's a wait and watch scenario. No triggers right now. And if you are following the webinars and were present in the last webinar, you should have been able to see this opportunity which we discussed last time. Which, by the way, brings our tally of number of trades we have discussed and captured to 65 in the last 54 webinars, which is also scrolling down on the screens. Right. So with S&P, I don't think I want to add anything here. If you want to discuss the or check the long term kind of discussion, we did it last time in the 54th webinar itself. So just go to the 54th webinar on the YouTube channel and check the S&P timestamp. You can do that by going to the 50 as Market Analysis YouTube channel, clicking on live, and here is the 54th webinar. You can check it. Once you click on it, there will be timestamps available in the comments as well as the description. So with that out of the way, let's now head over to our Nifty chart, which will be followed by the last chart of BTC. Nifty, I'm looking to discuss today a little bit of the. One second, I've seemed to have missed some comments here. Let me just quickly check them. Philippe has asked on the upside still 4080 and then 4194. Let me check. It is taking a little bit too much time to load, but yeah, there it is. Okay, so on the upside, Philip was asking the levels. Like, yeah, so if it really is going to go upside, then above 40, what is this, 4080, we'll look to consider the upside possibilities. And if it really does sustain above 4080, then it will very likely, or it is heavily likely that it will take out the last highs as well and head on for a big momentum wave 3. Right? We already discussed it last time in detail. So again, just check that webinar. I don't want to discuss the same thing over and over here. Okay, now heading over to our next chart of, one second, are there any more comments? All right, Steve and Philip. So yes, so next thing which we want to discuss is take a look at Nifty's higher time frame chart, right? So higher time frame chart, I'm looking at it because there are, as I've said so many times, multiple scenarios that are possible on this chart, and many times I have signaled that there are some bearish scenarios which suggest extreme bearish movement. And we have already discussed the triple zigzag kind of corrections, which seem to have suggested that the downside may have completed here, right? So, but if the downside may have completed here or is complete here, then there is nothing much to discuss, right? Once the market goes above 71,000, 17,200, then we will start to look for more bullishness. But from this chart, I'm getting the feeling, I'm not going to share the complete reasoning, but I'm getting the feeling that it has positioned itself for a possibly extremely or exceptionally big down move. So this is from just a technical standpoint. I'm going to share the Elliott Wave analysis, but the reasoning behind putting a little bit more emphasis on the bearish count goes beyond the scope of these webinars and basically comes under my own proprietary discussions, which are obviously reserved for my training program students. Anyway, so what I'm thinking is that if this is the first leg down and this is the second leg up, then we have the next impulse under formation, right? And this could be, let's say, your dot one. This is the dot two. And now two possibilities exist. I'm just going to discuss the simple one. If this is the dot three and the dot four, then the four may continue sideways, right? Within the same price zone, 17,200 to the upside and 16,820 to the downside. So between this box range, if the market continues, it is still considered a continuation of the bearish movement, right? And generally, the bigger or the more time the wave 4 takes, the faster or stronger the fall is, generally speaking, right? So what I can see right now is this count is fitting perfectly well with the my own analysis or proprietary analysis, and I think that gap down movements are again very likely in this kind of scenario, right? So currently, if we consider that if 4 is already complete, then gap downs for the next leg down, and in this case, as I said, also there is another scenario that this might not be the 3, this might not be the 4, but it is some simply continuing down as a nested impulse, that is an impulse within another impulse within another impulse. So those of you following the webinars will actually get the idea, but long story short, it is also possible that the 3 is not here, but it's continuing down with an extreme force and is somewhere here, and then there will be the 4 and then there will be the 5. So all these scenarios are possible, and as I said, in these kind of situations the markets will, if they really have to fall like I'm thinking, then they will just simply open gap down like this counter has done multiple times in this series as well, right? And then the fall will escalate. But the interesting fact here is that if it falls down now with the gap down and really does go down, then you have to take note of the fact that the previous gaps were within the ones and the twos, and if this count is correct or anywhere near correct, then this is the start of the wave 3, which is supposedly the fastest of the fastest in the whole series. So you get the idea why I wanted to take a look at this on the larger time frame. Of course, anything is possible, right? And you of course should do your own analysis. Basically, the whole disclaimer which I discussed at the beginning of the webinar applies, but I just wanted to show off my current view on based on my proprietary analysis. Right. With that out of the way, if you guys have any quick questions on this, just ask them in the comment section. Otherwise, we'll move over to our last chart of BTC. And yes, guys, most importantly, I want to tell you guys that I'm looking to start the new project covering Nifty in more detail and possibly some NSE stocks. And currently, I don't have a date, but the plan is to start near the first week of or within the first week of March or near the start of March, basically. Sorry, April. What am I even saying? Near the start of April, right? If you guys have any suggestions on this, those who specifically follow the Indian counterpart or the NSE stocks and the indices, do let me know. You can just hit me by the using the contact us page, or you can just use the comment section on YouTube as well. Okay, guys. So let's now head over very quickly to. Okay, thank you for the confirmation, guys. Let's now head very quickly to our last discussion. PTC. I was checking it before the webinar, and it does seem like this wave 3 is a little bit too small for the 3. So if it really is progressing in the upward direction, then I think we will have to recount it something like this. The 1 is fine, correctly placed over here. So is the 2. And looks like the 3 may be a little bit too much up. That is, this 3 will be have to, we will have to transpose over there. And how will that happen is that if we are again in a nested formation, let's say this is the 1, this is the 2. 1 second. 3, 4, and 5. So this is what we currently think may be happening on BTC. See, I do not have evidence for it. When will the evidence come for it? It will come when this market gives this expected correction, which I just talked about. So we will check the measurement of this correction, basically the Fibonacci ratios and the way it has proceeded, like the speed of the price action or the momentum of the price action, right? Based on that, I can what do you call do further commentary. But right now this is just one of the things which I think might be happening on this counter, and the only reason I think that is because of this three's length. Okay, but do remember, guys, this is BTC and we are using log charts, so weird things can and do happen on this chart. I've seen them before. So it's just a hypothesis at this point. We'll wait and watch for now, right? So I do not think there is much to add here. We'll see how it proceeds and look to discuss it further, right? So that was all for this webinar, guys. Do make sure to hit the like button and do not forget to share the content. If you want to see more of these webinars, definitely more audience is required. And currently we also have sort of our time limit here. I have run this project for quite long. So I think near the end of March would be a good time to decide if to continue it or not. So if you are really interested, you can show your support by using the join button or sharing the webinar or both. But as I said, everything should have a limit and I'll see how it goes. Thank you for participating, guys, and I'll see you next time.